What's up, guys? It's me, Juan Pablo from 100% Finance at 100%finance.com. Mr. Cash Flow, Mr. Passive Income, Mr. Business Credit. I got what you need to succeed. Thank you guys so much for joining the channel. Again, my name is Juan Pablo. I'm a full-time real estate investor and online entrepreneur. Today's topic of discussion: what banks consider in regard to providing you with the business loans, the business capital, the business credit, the business funding that your company needs. All right, so let's dive into it. Without further ado, industry. That's one of the first things banks consider when providing you with any type of business financing, in other words. So what do I mean by industry? I'm glad you asked. Industry means what type of industry your business is in, right? What category does your business fall into? Is it in regard to real estate? Is your business in the industry of property management? Is your business in the industry of financial services? Is your industry in the industry of credit repair? What type of industry does your business fall in? Now, if it falls in any of those categories I just named intentionally, and I'll repeat, okay? If your business is involved in any of these industries: credit repair, real estate investing, or if it's in any type of financial services, generally speaking, banks do not like to lend money to those industries. Why? Because they are perceived as high risk. Even an insurance company, for business insurance, they typically don't like lending or extending insurance, except for real estate if you actually own, buy and hold. So I have no problems getting that hazard insurance, property insurance in other words. But generally speaking, they don't like to lend to those type of industries. Any industry that's perceived as high risk to the banks don't like to lend to it. So you have to be strategic. If you're looking to receive business capital for a company that you have in one of those industries that I just mentioned, then you want to be a bit more strategic, a bit more smart on how you name or portray your business. So for example, I use business credit, here we go, which we offer out 100% finance, right? Let me stop. Oh, I got something pop up. You guys can see me find on Facebook. Cool, you're just getting pop-ups. So we actually offer, oh, by the way, YouTube, I'm doing a simulcast. I got Facebook and Instagram right here. So by the way, we offer business credit. And I use this, you see this is my money team. I use this for real estate investing. So if you're interested, apply and we can provide you with a free consultation. No upfront fees, just apply and receive free consultation, okay? So anyway, so when I apply for these, I don't say I'm using it for real estate investing purposes. Many banks, many lenders, many creditors do not want to extend financing to those type of to that type of industry for real estate investing. Therefore, I say, you know what? I'll get the business credit under my property management name. And yes, I do own a property management company. Okay, so that's a safe industry. However, if you don't do property management, it's not to say that you can't create a business that has property management in it, even though you might want to use it for real estate investing purposes. Because I have people who apply for business credit through my company and they do it under credit repair. And we offer credit repair as well as a service at 100%finance.com. And unfortunately, when you use credit repair to apply for business credit, oftentimes you get denied simply because of the industry. So I know I spend a lot of time on this one category. It's one consideration that bank has in industry because it's vitally important. So make sure you know your industry. And if you have any questions about, hey, Juan Pablo, so what kind of business should I incorporate? Because I know I'm gonna get 1,000 comments about that. Apply and we'll provide you with the free consultation, okay? If you're truly interested, don't just leave a comment on the YouTube video, because I don't like going back and forth answering long, detailed questions, especially if it's about your personal information or about the details of your business. It's too time consuming for me. I answer people's comments, but it's time consuming if it's a specific comment. And it's hard for me to comment or provide you with advice if I don't see the whole picture, if I don't see your credit report or your business goals and your business needs, okay? So if you're curious about what type of industry that you should create to strategically enable you to obtain business funding, then apply. You can apply for business funding without having the business incorporated. Newsflash, all right? Just apply. We'll look at everything will ascertain your goals and give you the consultation. Okay, I don't want to beat it over the head like a dead horse, right? So let's move on to the next point. Next thing I have is the asset. So when banks provide you with funding, they look at your industry and they look at the asset in which they're financing it, on which they're providing finance. So for real estate, for example, I use commercial mortgages to acquire multifamily property. So I have 63 units in my portfolio. So a mortgage lender or commercial lender will be willing to extend the financing if they look at the asset and perceive the asset as profitable. Okay, so when you're applying for business credit, for example, and I was just using real estate as an example from a mortgage standpoint, but if you're applying for business credit, let's say it's unsecured lines of credit or unsecured credit cards like the ones I just showed you, you can enable yourself or better your chances, in other words, of obtaining business credit, business capital, business funding, if and only if you prove that you got other assets. You know, if they see that your business is profitable, if it's currently profitable. But if you're starting a new business and you have no assets, then more than likely you might not get the funding unless you use a personal guarantee. So these business credit cards that I show you guys right here, they're with personal guarantees. Do I mind? No. Because at the end of the day, I use it for real estate investing. At the end of the day, I use one credit card. Let's say I'll take one credit card out the stack. I use one credit card to buy a 10-unit apartment building. Let's assume this is a 10-unit apartment building. One credit card to buy a 10-unit apartment building in which I have 10 tenants pay off this one card for me. So there's really no risk involved as long as you use debt with precision, which we teach in our coaching programs at 100percentfinance.com. So depending on the industry and depending on the asset or what assets that you have, assuming you currently have assets that are profitable, a bank will consider that in regard to providing you with business funding. Next thing is the borrower. Okay, so banks will too look at you as an individual, because I get this a lot. Hey, Juan Pablo, I understand what you're saying on YouTube, brother, but in my opinion, because it's only an opinion, right? In my opinion, I believe that your personal credit should be separate from your business. And I say, well, yes, in a perfect world, that does sound good. It does sound gravy, doesn't it? Excuse me, the AC cut on. So my apologies for the noise. If the noise is bothersome, please place a comment. Let me know if it's annoying, so I can get it better with the videos and so forth, so I can better serve you guys, right? So back to what I was saying. So people say that, yeah, man, I think they should be separate, your personal from your business. I said, well, ideally, in a perfect world, that would be wonderful. That'd be spectacular, magnificent. However, if you have, right, based upon if you have no assets, your business isn't even incorporated yet, it has no seasoning requirements, hasn't even been incorporated for 2 years, you don't have full documentations to prove the profitability of your asset, of your business, meaning you don't have a tax return for your business, you don't have bank statements to prove the number of transactions you receive, or merchant accounts. You don't even have a merchant account. You don't have P&L statements. If you don't have any type of documentation or payback score, for example, to show that your business is a legit business, then why on earth would a bank provide you with business funding? So they're going to look at the borrower because they think this way. If this person, Jane Doe, was prudent in managing her own personal finances, which is predicated upon her FICO score, more than likely she could be prudent in managing the finances of a business. So let's go ahead and give her this loan. But if Jane Doe says, you know what, I don't have any full docs for my business, in fact my business isn't even incorporated, in fact my credit is jacked up, then why on earth would a bank provide Jane Doe a loan without looking at her personal credit? It's just like you. Take you, for example. If you was lending money to your cousin, and you know your cousin always don't pay people on time, you know your cousin be shicey at times, you love this person, you dap him up by Thanksgiving dinner, you send him a text saying happy birthday, but you know damn well, you ain't gonna give your cousin a loan. Why? Because you know he ain't gonna pay you back. right? Especially if you don't have any documents, no business plan, nothing to prove that he's a credible borrower. Why on earth would you extend him any type of loan? Especially if you want that money back. Especially if you need that money back. Banks think the same way. Okay? So they look at, this is the things they consider. They consider the industry, they consider the asset, the borrower, and last, if you have any collateral to back it up. Just in case, worst case scenario, if you're not able to repay the loan back, they can sue you, right? And be able to take over your assets or liquidate in some form or fashion. Just like with real estate. They don't, in real estate, most banks don't mind giving you 80% of the mortgage, pending certain circumstances. You know, if you have 80% occupied, for example. But generally speaking, they don't mind giving you a loan on a property that's habitable as well as occupied. They don't mind giving you 80% of the money you need. Why? Because it's collateralized. If I'm saying it right. It's collateralized, okay? So which means they have security. They have something called an apartment building or a house that they can foreclose on you. They can take it over to somewhat recoup their losses. You got it? Alright guys, so that's pretty much it. And if you guys are interested in receiving business funding, again, even if you don't even have a business, even if you think you don't qualify because your credit, still apply. Why? You never know, you might qualify. I did it too. I had a 680, and ideally we want a 720 FICO score, but I had a 680. Now what if I had that same mindset that some of you guys may have? That, oh, I have a 680, I might as well not apply, I might as well wait until I repair my credit to the point I get to a 720 to apply. It wouldn't work. I applied at a 680, and I received funding with that 680. You never know until you apply, and it's free consultation, so what do you have to lose? Nothing. And even if you don't have a business incorporated, because many people say, well, I'm going to wait till I incorporate my business first. Then, no, just apply. I remember I was advised to apply. I applied, they looked at my personal credit, and then they advised me on how I can incorporate a business. I incorporated the business the following business day, and I received funding for that brand new spanking business I just incorporated online through my state Secretary of State website, and I received funding 30 days later. How would I have received this information or this funding if I didn't apply? Okay? So if you have any questions, just apply. Alright? Don't be hit me up with all these comments about your personal situation. It's important. We want to answer it, but we want to look at your credit, the total picture, your business goals and needs, so we can better advise you. How can we advise you if we have incomplete information? It's just like a doctor, right? If something's wrong with your body, let's say a bone or some sort, they want to know complete information before they provide you with a proper diagnosis. What do? They take an x-ray. They want to look at everything to see if it's fine. For example, you know, maybe something's wrong with a bone, you're black and blue. They might think that the bone is broken or fractured. So they'll take an x-ray. Likewise, before we advise you, we want to look at the total picture. Look at everything before we can prescribe you the best prescription. And if you don't qualify based upon your personal credit, we have credit repair and we have inquiries. Because people ask, hey, when you apply for business credit with a personal guarantee, don't you receive a lot of inquiries? So won't that prevent you from getting a mortgage in the future? Duh. I have 63 units, brother or sister. So that implies that I use business credit 23, and I would do a process, wash, rinse, repeat. Get the business funding, remove the inquiries, apply for a mortgage, close on a deal, repeat the process. It's that simple. And if you need coaching, we offer coaching at 100% Finance as well. Alright guys, so I'm out of here. I'm going to go ahead and answer some comments and questions on Facebook and Instagram. You can follow me at Juan Pablo on Facebook or 100% Finance. And yeah, that's it. So as always guys, to your success, earn passively, live passionately. Peace, YouTube. Thanks for watching the video. We appreciate your viewership. By the way guys, make sure you subscribe to 100%finance.com. We have a plethora of tools that can help you succeed financially. We have a report on credit repair, 3 tips on how you can improve your FICO score. We also have a business credit ebook. We have a ton of real estate related documents, from deal analyzers to a mortgage calculator, a whole bunch of resources. You just have to subscribe. And one last thing, don't want to forget, we are offering free live webinars to answer your questions. This is only made available to our website subscribers. So you have to subscribe to 100percentfinance.com to receive the details as to the date, the time, and the call-in information for the webinars to answer your credit repair, business credit, or business funding needs, as well as your real estate related questions. Thank you guys again for watching, and subscribe.